All right, what's going on, guys? So wanted to make a quick video on the cycles, what's going on right now. Are we at the top? Are we at the bottom? Are we going into a bear? It's been pretty crazy out there. And I've been racking my brain over the last 3 weeks trying to find out, what are we doing right now? Is this top? Are we going to go into a 3-year bear market? And I've been doing a lot of research, listening to a ton of different analysts and TA guys and macroeconomic guys, bullish guys, bearish guys, and I think I found one of the best, how would I put it, explanations for what's going on right now and what is likely to happen over the next 6 to 9 months. Okay, so before I go into the thesis for what we're going to do, we have to identify that this time is different. Okay, I know those are scary words to say. At the end of every cycle, everybody always says that this time is different, and then they get wrong-footed. But this time has already been different. Whether you're a bull or a bear, you have to acknowledge that this time is already different. But let's dive into that first, and then we'll go into the thesis of why I'm actually bullish, and I think we're going to go into crazy all-time highs for all of crypto. Okay? So first, we have to look at the cycles. So in crypto, people believe we have 4-year cycles because we have had kind of 4-year cycles for the last 12 years. Now, the 4-year cycle theory really comes from the Bitcoin halving cycle. So every 4 years, Bitcoin has a block reward halving, which just means the amount of Bitcoin you get for mining an epoch gets cut in half every 4 years. Reason why this doesn't matter, at least doesn't matter anymore. Perhaps in the really early days, it contributed to Bitcoin price because there is a ton more Bitcoin coming out of miners back then. So the inflation rate was far higher than it is now. Whereas, back in 2012, you'd get 50 Bitcoin for unlocking an epoch. Right now, you're barely getting 1.5 Bitcoin. And it's just going to keep diminishing more and more. Another reason why this doesn't matter, even if it did in the past, is 90% of Bitcoin supply has already been released. And the remaining 10% will get released slowly over the next 60 to 90 years because of the block reward halving, getting halved every 4 years. So it's not going to have any or very little impact on the price of Bitcoin anymore, as much as it did in the past. So halving cycles do not impact price or impact these cyclical movements that we've seen in the past. Okay, great. So we've established that that doesn't make sense and why it's different already. Next is this season, or this cycle, we haven't had an alt season, okay? So typically we only see 2 reasons to get an alt season. Either 1, Bitcoin is in expansion, or 2, Bitcoin is having a blow off top at the end of the cycle, and then alts tend to rally with them. If this is the end of the cycle, we did not experience that at the end of the cycle. We did not experience a blow off top. In September, we had a little bit of elevation here at the altcoin season index, and then it got rejected and went right back down. So we haven't seen any crazy explosion in alts this season, if this is the end. Okay, so that's another reason why it's been different. Not to mention, the Bitcoin dominance hasn't fallen, right? Typically, at the end of a season, when alts rally at the end of Bitcoin's blow off top, we see Bitcoin dominance crumble because people are rotating out of Bitcoin into Ethereum, and then we go down the line to smaller market caps. That has not happened. Quite the contrary. If you're a bear, you have to grapple with the fact that Bitcoin dominance is still elevated. Why? Nobody knows. And here's another reason. Its macroeconomic factors are very different, vastly different, especially from 2021. So I've seen a lot of people compare 2021's Q4 to 2025 Q4. Now, this doesn't make sense to me, mostly because we are in completely different scenarios in the macroeconomic landscape. Okay, so let's look at 2021. 2021, we are coming off of the heels of COVID. Trillions of dollars got injected into the market. There was retail euphoria. Money was going everywhere. Everything was pumping in the beginning of 2021. Towards Q4, we started to have inflation spikes, right? People were scared about inflation, right? That was a new concern. And the Fed started to become hawkish. The Fed starts to cut rates at the end of 2021, which then leads to a mini bear market in 2022. Okay, that's interesting. We are in the completely opposite realm here in 2025. Most of 2025 has been hawkish, meaning we've had high rates. There's been quantitative tightening. The Fed has not been nice to us. China is printing and putting stimulus out into their nation, and there's dollar weakness, right? All around the world, people are becoming skeptical of the dollar. They don't want to hold the dollar because they think there's inflation. And now let's look at Q4. Now we're in 2025 Q4. The Fed is starting to cut rates. Quantitative tightening is completely over now in December 1st, and we're going to start opening liquidity valves, right? They haven't said QE yet, but they stopped QT. And another thing, right, the US has another card up its sleeve, and it's the Treasury General Account. The Treasury General Account is basically like the United States piggy bank. They've been hoarding money for the last year and a half. That account is filled to the brim with money that they can use to inject liquidity into the markets, right? The Fed doesn't have to use QE. That's not the only tool they have. They have the Treasury General Account. However, because of the shutdown, that account has been touched. We're going to find out tomorrow. I think tomorrow the shutdown will be over. If we start to tap into that honey jar of liquidity, and that might inject more liquidity into the markets. So we see vastly different scenarios for the cycles. Okay, gotcha. So we've established this time is different, and that cycles are not ruled by the halving cycle. So what is Bitcoin ruled by? What's up with these 4-year cycles? Okay, we see here Bitcoin has a far closer correlation to Bitcoin than it does to a halving cycle. Bitcoin has a really close correlation to the NASDAQ, to the stock market. Now, obviously, in the early days of Bitcoin, it was a bit more erratic, mostly because there was a new asset, there was more liquidity. There was less liquidity and more inflation. But as it matures, we get closer and closer to the stock market. This is the Bitcoin overlaid on the NASDAQ. This is Bitcoin overlaid over the S&P 500. Again, the early days, it was a bit rougher in terms of the movement, but as it gets more mature and more liquidity is injected into Bitcoin, it follows the stock market way, way closer to anything else. Okay, great. So we've identified Bitcoin follows the stock market. Now we just need to figure out, what does the stock market follow? This chart right here is possibly one of the most important charts you'll ever see. In black is the ISM. So the ISM measures the business cycle and business debt and liquidity cycles. What does that mean? It just measures when businesses are borrowing a lot of money and there's a lot of business activity. Okay? So this is, keep in mind, this is not like a company or anything that you're charting on a day-to-day. This is economic data, kind of like just like the inflation data that we receive once a month. This is the same thing. We receive this once a month, and it tells us how productive businesses are doing and how much debt is in the cycle and liquidity in the system. Now we see here there's a 4-year sine wave over the last 15 years. The ISM, which measures business liquidity and business debt cycles, has been following this 4-year ebb and flow. However, something very strange happened in 2025. If you see here, in 2025, we didn't go up where we should have. In 2025, if we followed the 4-year cycles, we should have gone up. What happened? Okay, to understand this, you need to go back to 2008. So the ISM, economic data, has existed for way before 2008, well into the 80s, I think. And if you follow it, it doesn't always follow 4-year cycles. It's going up and down, but it follows different types of patterns. Sometimes it's 5 years, sometimes it's 6 years, 3 years. But for some reason, after 2008, it followed these 4-year cycles. Why? Well, something happened. The housing crash. Everybody was in a tight spot after 2008. So the Fed dropped rates, made liquidity available, and many banks and businesses borrowed money at extremely low rates. It just so happened that many of these businesses borrowed at a 3 to 5 year term limit, meaning your loan matures in 3 to 5 years. You can average it out to about 4 years, meaning at the end of those 4 years, your loan matures. And most businesses will just roll over. If you're a productive business, you've expanded, you have more liquidity, now you just roll that debt over, maybe get a larger loan, and business goes on. Well, we've seen that. Over the last 15 years, we've seen these booms and busts of the business and debt cycles going up and down, of businesses just rolling over the debt. However, we're seeing a change here in 2025. Why is that? Now, I'm going to get a little technical here, so just stay with me. Something big happened in 2021 and 2020. Obviously, it's COVID. When COVID happened, again, they dropped rates to zero and they injected a bunch of liquidity. What did businesses do? They extended their term limits. Whereas before, it was common to see, 4-year, 3 to 5 year maturation rates for loans. The uncertainty was so high for COVID, many businesses extended that to more of a 5 to 7 year term. What did this do? We extended the business and debt cycles. Now keep in mind, Bitcoin was born in 2009. So Bitcoin was born in these 4-year cycles. That's all we've known in crypto. But now it's changing. This is different. Okay? So with 2021, people getting term limits at a 5 to 7 year rate, this extended the debt cycle. So now, if you get all of those, the average of those loans, and you average them out to what number they're at, it's now close to 5.4. So this is the ISM on a 5.4 year sine wave. Whereas you see, we've actually just experienced a mini bear market at the ending of 2023 and 2024. And we're going to start to come up towards the end of 2025 and into 2026. Wow, that's interesting. Why is this? Because now, in 2026, many people will have their loans mature, they will have to refinance, and they're going to get an injection of liquidity. Well, it just so happens that the Fed is starting to cut rates right now. And it just so happens that they stopped QT. Isn't that a coincidence? So we're seeing here that these 4-year cycles weren't following anything but liquidity and debt cycles. That's all it is. It's very clear. Okay, so now we have to identify, so Bitcoin follows the stock market follows debt and liquidity cycles. Okay, what does the ISM follow? How can we know where the ISM is going to go? Okay. Before we answer that, let's overlay the ISM over Bitcoin, just so you can see the correlation that is here. So the ISM is measured, again, it's not a regular chart, it's just economic data. It's measured from 0 to 100. The closer you are to 100, the more productivity and liquidity in the market. The closer you are to 0, there's basically no liquidity. Usually they range anywhere between 40 to 60. Anytime it's over 50, the ISM, it means there's more liquidity in the market and there's business productivity. Great. Keep that in mind. On this chart, it's Bitcoin overlaid on the ISM. Every time the ISM has gone over 50, you see a little dotted line here. You'll notice every time the ISM goes over 50, Bitcoin goes into an expansionary period. Okay? So, happens in 2012, 2016, 2020. ISM goes over 50, and shortly after, Bitcoin goes into a 6 months to 9 month expansion period. Okay, that's interesting. Here is ISM overlaid on Bitcoin dominance. Now, Bitcoin dominance has been a really big issue this cycle. Why? Because many people who believe that we're at the end of the cycle are stumped on dominance. Usually dominance falls. Okay? Right here, this is the Bitcoin dominance year over year inverted. Okay? So it's inverted. Meaning on this chart, when dominance goes up, it means dominance is actually falling. And when it goes down, it means dominance is going up. Why is this important? Because when Bitcoin dominance goes down, it means it's an alt season, right? Why is it an alt season? It's because we have rotations, or there's a lot of liquidity in the market. So people are willing to be more risk on. They're willing to risk more in lower market cap cryptos. And we see here that it's tightly correlated with the ISM. Why? Because when ISM is elevated, it means there's more money in the system, meaning there is more risk on behavior. However, it's been down here this whole time. Bitcoin dominance has been high, right? Remember, this chart is inverted for dominance, has been high, while ISM has been low, meaning when ISM starts to creep up, dominance will fall, leading to increased risk on behavior and alt season. Those are all interesting points. So we've identified the ISM is a really important economic data and point to follow. How do we know where the ISM is going to go? Here's how we know. So Bitcoin follows the stock market. The stock market follows debt and liquidity cycles, which is the ISM. What does the ISM follow? How do we know where the ISM is going to go before it gets there? Now again, these are not my charts. A lot of these charts I got from Real Vision. Raul Paul, him and his analysts did a lot of the heavy lifting on this. They manage billions of dollars and they use all these charts. So if you want more information, I'll link their video below and they'll do a better job of explaining this. But just so you guys can get a synopsis of the thesis here. This is the ISM in black, overlaid on financial conditions index. So from what I understand, this index is measuring where liquidity is going to be going over the next 9 months. Okay, so it's following central banks and government policy. And what we notice is, one, it's very tightly correlated to the ISM, and it leads it by 9 months. Meaning, wherever this is, right, this chart is right now, it's where ISM most likely will be in 9 months. Okay, so if we follow this, we see that this is already at 56 if we're measuring it in ISM terms. Meaning in 9 months, and this chart is, honestly, this data is probably back from August or October. So meaning, give or take 8 months or 7 months, the ISM will be at 56. Remember that I said, anytime the ISM is over 50, we have an expansion in the market, especially for Bitcoin. Meaning we're about to experience an expansionary period for the stock market and crypto as well. Okay, well, how do we know this is just not a one-off? Here's another indicator. This one's a lot more in depth. Central bank policy, liquidity, and leading indicators of growth momentum index. That's a mouthful. But basically, this is following global liquidity, which, again, this is the mother of all indicators. It's following where money is and where it's going from central banks and from world governments and basically leading growth indicators. This one, you see it's extremely tightly correlated. Again, leads it by 9 months. This is going back all the way to 1985, just so you don't think this is a fluke. These two are tightly correlated all the way back from 1985. So we see that when this indicator goes up, the ISM tends to follow. And when it goes down, the ISM tends to follow. And it leads it by 9 months. Where is it now? It's at 58 on ISM terms. Meaning, over the next 7 to 9 months, 6 to 9 months, the ISM will experience an expansionary period where it's going to go up if we follow this chart. Meaning we are not at... Guys, if this is right, it means Bitcoin is not topping. There's a reason the alts have been lagging. It's not because we're at a cycle top. It's because we're at mid-cycle. We're in the middle of a cycle. That's why the alts haven't performed. It also means our price targets were way lower than they should be. It means Bitcoin's going to have a crazy expansion over the next 6 to 9 months, maybe even a whole year, where Bitcoin is probably going to go $200,000, $300,000, $400,000. XRP is probably going to be, I don't know, $30 to $100. There's going to be so much liquidity coming into the markets over the next 6 to 9 months and so many people are going to get wrong-footed. So just so we can understand the theory, it's a domino theory. Bitcoin follows the stock market. The stock market follows debt and liquidity cycles, which is the ISM. And the ISM follows global liquidity. Where is global liquidity right now? It's already being injected into the market. I mean, and it's just coincidental that the Fed is cutting rates. The Fed is getting ready to inject liquidity. The general treasury account is loaded with cash, and there's dollar debasement around the world. So the dominoes are lining up for a crazy expansion starting now. And it would be funny if right after the government shutdown, everything just decides to go up magically. That's an interesting theory. Here's another really interesting chart. This is the ISM overlaid on the Russell 2000. Now, keep in mind the Russell 2000 is like the altcoins of the stock market. Why is this important? Because whenever the Russell 2000 is breaking out, it means there's increased appetite for risk, all right? A risk-on behavior, meaning there's more money, all right? People find themselves with a lot more money than they know what to do with, so they decide to invest it in lower market cap stocks because they're looking for way higher returns, okay? Where has the Russell 2000 been? We've barely been able to break over all-time highs. It's actually been a little disappointing because that's an indicator many people were following to trigger the alt season. Well, if we see here, they're pretty closely tied with the ISM. The ISM has been sitting down there with the Russell. What happens if over the next 6 months, the ISM goes up and Russell breaks into all-time highs? We will trigger a expansionary period where not just alt season, but everything will go up. Another reason why this time is literally different. It's so different. This might be one of the greatest bull runs we ever experienced. So what are the price targets? If we have a full cycle here, I think XRP is going to $100. XRP will most likely go to $100 in less than a year. Bitcoin will be anywhere between $400,000 and $1 million. I can't believe I'm saying that because it sounds ludicrous. But we have to understand where we're at right now if this is true. Again, keep in mind, financial conditions right now are 9 months ahead of the ISM. Financial conditions are showing that we are going into expansion. Central bank policy and liquidity, again, going into expansion. If this is right, we should be buying with everything we have. We should be selling our houses, we should be selling our cars to buy the dip because we are about to experience the largest bull run of our lives. I think this is the best thesis that I've seen. And I know there's a lot of bearish divergences out there right now and people are concerned about that. And perhaps we go a bit lower here in November. I don't think so, but let's say we do. We're not going into a bear market. There's no way we're going into a bear market. This is a mid-cycle bottom. And we're going to go higher. Now, why is the government doing this? Now, that's where you can make your own narratives. I have my own. I think it has to do with AI. I think we are in an AI arms race, and we are printing ourselves into winning this race. Because if we win the AI race and we get, free labor, free energy, free whatever, and we have robots that are doing all the work, it'll be the greatest deflationary tool ever made that mankind's ever seen, and it won't even matter how inflated your currency is because we're going to see so much economic productivity. It'll outweigh it. So that's what I think is happening. Again, that's just my personal belief, but the ISM is something you cannot ignore. The ISM is telling us we were at a bottom over the last 4 months, 5 months, and we are about to rise aggressively in liquidity. Again, the queen of all indicators is global liquidity. I understand that now. It makes so much sense. Just follow the money. It's the simplest thing we could. Anybody who trades knows. Follow the money, and this is the money right here. Again, if you want a way more in-depth explanation on this, I think I did a crappy job compared to Rob Paul and his analysts. I'll link his video down below. You guys can dive into his video, and he gives you a lot more charts, a lot better explanation than I could. But I think this is most likely what's happening and what we're going to see over the next 6 to 9 months. Will XRP hit $100? I don't know. Will I hold to 100? I'll have a forever bag. But yeah, that's what I think is going down. If you like this video, leave a comment, and I appreciate you guys for watching.